Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody guys. Today, as I have promised, Friday we'll take a look at the Great British Pound. So of course it will be better if you will read the whole analysis, the whole weekly research that we have prepared, because the major part of the conclusion that we have made on the Great British Pound perspectives are followed from statistics data and the deep analysis of the situation and the economy in Great Britain and overall global economy that's chilling out. And shortly speaking, there were made some conclusions that the sentiment of the Bank of England statements recently mostly indicates that the Bank of England would like to postpone the first rate hike as far as possible. And previously they have to make some promises or hidden promises that they intend to hike the rate, because they have had not significant reasons to postpone it. But right now, with the chilling situation in the global economy and in China in particular, with the bad recent non-farm payrolls data from the United States, they have reasons to postpone the rate hiking process, and then the first rate hike from the current year to the next year. Also, there's really some suspicions that economy of the Great Britain will show the desirable 2% inflation in the data that will be released on the nearest Thursday. In fact, this will be the superb Thursday, because there will be simultaneously the data release and Bank of England meeting, so concerning the rate. And that's why this will be really could become a really real doom and gloom session. Right now, the mass media, based on the recent statements, the publications, for example, in the Reuters news, just increased the stir inside around this rate hiking, and mostly the conclusions of the recent comments come to the opinion that this is already this step has been accepted, and this probably should definitely happen, this rate hiking. And if this will happen, this really could lead to significant action on the downward direction on the Great British Pound. So we think that you could read our analysis. You will find some more information on this sub. On the technical picture, guys, the situation also is not really simple, because although we have the clear bearish patterns on the high time frame charts, on the monthly in particular, on the lower time frame charts, this bearish action has become slowed recently by some reasons. Initially, it has happened based on the expectation of the soon rate hiking in England. A bit later, the bad numbers on the non-farm payrolls and the mixed statistics from the United States already has supported this currency pair. That's why now the bearish signs that we have seen previously right now have become a bit blur. But still, we think that overall situation and the medium-term perspective looks more bearish rather than bullish. At the same time, in the short-term perspective, market could fluctuate and could show some even upward action without the possible breaking of the overall bearish context. And that's why we should carefully look for action that we see on the common week. Because the signs are not really, we can't say that's definitely bullish or bearish, because for example, on the weekly chart, we have the grabbers on the monthly, and on the weekly chart we have this flat action. So here the trend on the weekly chart is bearish. This is the daily chart, but I just explained this action. But we do not see here any downward acceleration. So that could become the indication of bullish dynamic pressure. That in turn could trigger some upward action. You see, so that's why the situation is a bit sophisticated here. And mostly it will depend on data and what the Bank of England will say on Thursday. So in the shorter term perspective, guys, we see here some kind of this housing of the bullish power. Because take a look how it has started here and how it looks here. Here it was really thrusting action to the upside. Here market has completed reversal swing because it has created upward action, upward swing greater than the former previous bearish swing. And this causes a reversal swing. After that, logical retracement has followed. This is normal. But here, guys, market wasn't able to continue this pace, to support this pace to the upside. Failed to break this resistance here on weekly chart. We have the fib resistance and turn to the downward action. Now take a look at what has happened. The following upward action has become smaller than the previous bearish swing, and right now the same stance. So bearish swings right now are greater than the upward swings. Also, guys, in two recent tops, market wasn't able to hit to reach this upper body. In fact, here we have some kind of the large triangles forming, and the signs that market wasn't able to reach the opposite body here looks really bearish. So that's why we need to get the confirmation what to watch for to clearly understand whether the market will continue to move high or not. From the long-term perspective, guys, I would say that until market stands below this top, the bearish scenario will be valid. This reversal to the downside is possible. In the shorter term perspective, from the common week, we will be watching for a 4-hour time frame chart, because here, guys, we have some inner triangle is forming on the Great British Pound, and in particular, we are mostly interested in this inner ABCD pattern. Why it is so important? Because, guys, if you will follow the market mechanics of this ABCD, this will let you to understand what to watch for to get the clear signs whether progress will become bullish or bearish. Let's start from this initial point when the upward action has started. This was AB leg, then it was normal retracement. But take a look at the CD leg. CD leg is nothing more but the bad numbers on the non-farm payrolls on the employment market in the United States. This has led to the strong thrust up. This CD leg was really very fast compared to the AB, and market at just one moment has hit the ABCD target. After that, you can see that market has shown too deep retracement compared to the strength of the CD leg. Usually when the market shows such sort of the acceleration on the CD leg, it almost never shows such sort of the retracement. It's too deep. Almost, we could say that it almost has erased this thrusting action. This looks really bearish. But the most interesting is this recent thrust up, because, guys, here should be the continuation to the next target, because all other retracement has been done already. So take a look. Market has completed the target, shows the retracement, despite whether it will be too deep or just normal. It doesn't matter, in fact. The fact is that what is really important is that here, guys, this is the extension leg. This was extension leg. This is contraction. That's again the extension. So it means that if market really bullish, it should continue to the next target. So the next target starts at 56.40, and it's precisely this upper body. That's why, depending on how market will behave here, we will get the clarity whether market is really bullish and is ready to continue move higher. In this case, we will do nothing, or maybe the scalp traders could try to take the long position in the continuation to the 56.40 area. Or if market will fail to pass through this area, it will tell us that probably the bullish scenario will fail, and we should be ready for a downward breakout. Because here market can't turn to the downside if it's really bullish. Market just can't stop at the same target and reverse here. This will tell us that market is not bullish anymore. That is followed from the normal action, how market should behave. according with the extensions and the contractions wave. That's why this point will be the major point that we'll be watching for on the next week. In particular, if you'll take a look at the hourly chart, you'll see that here we could get the Jordan Apple directional patterns. I do not know, maybe scalp traders will trade them, but mostly for us it's currently the time to just monitor. I'm not really prevent you from taking any positions here. You could trade them if you feel comfortable with this. It's okay. So here, guys, we could get double repo pattern, and if we will get it, this will tell us that the chances on the failure of the upward breakout will increase and market really could drop lower. This will increase chances on the failure of the bullish setup and will increase chances of the further downward action. If market, for example, will form here the double repo failure, so it will confirm the double repo, but then continue move higher, that will support the bullish view. In this case, market really could show the breakout and continue move to the 1618. So you can see how important this point is from the short-term perspective. That's our current analysis. In the two words speaking, we still think that bearish signs on the Great British Pound in the longer term perspective are stronger, and they have currently, at least at current moment, greater value than the bullish signs that we see. In the short-term perspective, guys, market still has chance to fluctuate below the 159.30 area, and but on the next week we could get the clarity whether market is really bullish or not. First, in the beginning of the week, how market will respond to this area. Second, on Thursday, this will be really very important session because we will get the Bank of England statement, we will get the inflation data in the United Kingdom. So this will be, I think that the Thursday will clarify many questions. So let's see how it will turn.